Bitcoin, the world's first decentralized cryptocurrency, once deemed a niche experiment, has surged to new heights. Today we witness it pushing past previous all-time highs and reaching a market cap of $1.7 trillion. But what's driving this latest rally? And where does it leave the future of Bitcoin and the broader cryptocurrency landscape? In this episode, we break down the recent surge, explore the forces at play, and look to what's next for the digital asset revolution. Stay tuned as we dive deep into the world of Bitcoin and its impact on the future of finance. Bitcoin's recent price surge has been nothing short of historic. But what's behind it? Let's break down the three primary forces that analysts believe are driving Bitcoin's new all-time highs. First, let's talk about institutional interest. Over the last few years, a growing number of financial giants, including BlackRock, Fidelity, and Morgan Stanley, have begun entering the crypto market. Their entry has brought increased liquidity, legitimacy, and, most importantly, significant capital. These institutions recognize Bitcoin as digital gold, a hedge against inflation and a potential store of value in a world where traditional assets are looking increasingly risky. And now, with giants like BlackRock filing for Bitcoin ETFs, institutional demand for Bitcoin has reached an entirely new level. Second, we're looking at global economic conditions. As inflation persists and interest rates remain unpredictable, Bitcoin is seen by many as a hedge against traditional financial uncertainty. The appeal of a decentralized, finite asset grows as central banks print money and debt levels hit record highs. Simply put, Bitcoin offers an alternative. Bitcoin ETFs are a monumental development. ETFs, or exchange-traded funds, have long been a staple of traditional finance, providing investors easy access to diversified assets. A Bitcoin ETF, especially one that's spot-based, would allow traditional investors to gain exposure to Bitcoin without directly purchasing it. The key here is the difference between a futures ETF, which we've seen before, and a spot-based ETF, which could be coming soon. Spot ETFs are based on the actual price of Bitcoin, not its projected future price. If approved, they would require direct Bitcoin purchases in the market, effectively raising demand and potentially driving up the price. Imagine a flood of new investors, pensions, insurance companies, hedge funds, all with an appetite for Bitcoin, able to access it through a regulated, familiar financial product. This could bring tens or even hundreds of billions of dollars into the Bitcoin market. So what's next? While we can't predict exact price movements, Bitcoin's future is tied to several evolving factors. First, we have institutional adoption. The more institutional players come on board, the more legitimacy Bitcoin gains, increasing demand and pushing prices higher. However, regulations play a crucial role. Governments around the world are exploring how to control, or at least monitor, cryptocurrency activities. In the United States, the SEC's rulings on Bitcoin ETFs are pivotal. But so are international regulations, with countries like the United Kingdom, Japan, and South Korea already implementing their own frameworks. And then, we have the Bitcoin halving event scheduled for 2024. This is when the reward for mining new Bitcoin blocks will be cut in half. Historically, halving events have been linked to bull runs, as they effectively reduce the rate at which new Bitcoin enters circulation, further increasing its scarcity. If history is any guide, this halving could push Bitcoin's price higher, given the combination of reduced supply and steady or rising demand. What about the rest of the cryptocurrency market? Bitcoin's movement often acts as a bellwether for other cryptocurrencies, including Ethereum, Solana, and others in the DeFi and Web3 space. Ethereum, as the leading smart contract platform, has seen a similar rise in value. Its recent shift to proof-of-stake and new applications in decentralized finance, DeFi, and NFTs have kept it relevant and increasingly valuable. DeFi, decentralized finance, is a rapidly growing sector, allowing users to borrow, lend, and trade without intermediaries. This decentralized ecosystem is only possible due to cryptocurrencies and blockchain technology. The more it grows, the more value it could bring to the entire crypto market. Meanwhile, NFTs, Web3, and newer chains like Solana and Cardano are attracting fresh capital and creative energy. While some projects might not last, The sheer scale of investment into these areas indicates that digital assets are here to stay. Of course, every investment comes with risks, and cryptocurrency is no different. Prices are volatile, regulations are uncertain, and technical challenges remain. But for every warning, there's potential. Bitcoin and cryptocurrencies have come a long way since the early days. They're not only an asset class but are becoming integrated into everyday life, payment systems, and financial services. In some countries, Bitcoin has even reached the status of legal tender, like in El Salvador and the Central African Republic, proving that digital currencies can transcend the boundaries of finance and become a real tool for people worldwide. Expert 1. The real question isn't if Bitcoin and cryptocurrencies will stick around, but rather how they will evolve. Are we witnessing the early stages of a new financial paradigm? Expert 2. With institutional backing, clearer regulations, and greater adoption, Bitcoin could have a long, bright future, though not without its fair share of bumps along the way. As Bitcoin breaks new records, governments around the world are introducing their own digital currencies, central bank digital currencies or CBDCs. These currencies could redefine how we think about money. But what do they mean for Bitcoin and the rest of the cryptocurrency market? Let's dive in. A central bank digital currency, or CBDC, is a digital form of a country's traditional currency. Unlike Bitcoin, which is decentralized, CBDCs are fully controlled by central banks and aim to combine the convenience of digital payments with the stability of a state-backed currency. Countries like China are already ahead with their digital yuan, while the US, Europe, and others are exploring their own versions. So, what does this mean for Bitcoin? On the one hand, CBDCs could compete directly with Bitcoin for everyday digital payments, especially if central banks promote them widely. Imagine a future where you can pay for groceries or rent with a government-backed digital dollar or euro. For Bitcoin, this could mean that its role in digital payments may become secondary, as people use CBDCs for day-to-day transactions instead. If CBDCs are easy to use, many people might simply default to these central bank-backed options. But while CBDCs offer convenience, they also raise big questions about privacy. Unlike Bitcoin, which operates on a decentralized blockchain, CBDCs are fully controlled by governments, allowing them to monitor and track every transaction. This has led to concerns about surveillance and control. Bitcoin and other decentralized cryptocurrencies, by contrast, allow users to make transactions without government oversight, which may attract those seeking privacy and independence. But does this mean that CBDCs and Bitcoin are destined to be rivals? Not necessarily. Some experts believe that CBDCs and decentralized cryptocurrencies like Bitcoin could coexist, each serving different roles. In this vision, CBDCs could work well for day-to-day transactions, while Bitcoin could be seen as a store of value, digital gold, offering an alternative investment for those seeking a decentralized hedge against inflation or government control. So how might the rise of CBDCs affect Bitcoin's price and future? As digital currencies become part of everyday life, more people are likely to understand and adopt digital money concepts. For Bitcoin, this could lead to increased demand as people become more comfortable with digital assets. CBDCs could inadvertently highlight the unique benefits of Bitcoin, its fixed supply, global reach, and decentralized nature. As people recognize the differences, Bitcoin may solidify its role as a long-term investment, particularly as a hedge against inflation and centralized control. Central bank digital currencies represent a new era in finance, offering state-backed digital money for everyone. But for those who value decentralization and privacy, Bitcoin remains a unique option. Whether CBDCs threaten or boost Bitcoin's future, one thing is clear: digital currencies are here to stay. The question is, will they work side by side, or will one ultimately dominate? As the world of finance transforms, we are witnessing a battle, or perhaps a balance, between centralized and decentralized money, and that balance may just shape the future of money itself. The rise of Bitcoin to its new all-time high signals a profound shift in finance. It represents the hopes and fears of a world ready for alternatives, where power lies in a code rather than a central bank. The road ahead is both uncertain and filled with promise. So what's next? As we watch Bitcoin and the crypto world evolve, one thing is certain: the future of finance is being written in real time, and we're all part of the story.